A life settlement is an alternative to a lapse or surrender of an existing life insurance policy. Life settlements have been around since the 80s. They've been known as viatical settlements, life insurance settlements. The easiest thing to call them is a life settlement. A life settlement involves the sale of an existing life insurance policy, generally on the life of a senior over 70 years old. And typically there's been a change in health from the time the policy was issued to the time of the life settlement. People do life settlements for a variety of reasons. They're usually because of a change in some circumstance. Somebody's had a change in wealth where their finances are less than they used to be and they need some instant cash, or their estate planning has changed where the laws now are over $20 million of exemption for payment of federal estate tax. These policies may have been purchased for the purpose of payment of estate tax. So if you no longer need that policy, the policy could be a candidate for a life settlement. Or some people simply just want to stop paying premium on life insurance. And so this is now an alternative. So a basic example, somebody has an existing policy, it's $1 million death benefit, there's $50,000 of cash value. And they're considering lapsing or surrendering the policy for the $50,000 of cash value. Versus the insurance company paying $50,000 directly to the owner of the policy, a life settlement is the sale of that policy for greater than that $50,000 and less than the $1 million of death benefit. And it's like an auction is created where buyers will, if interested, make a bid on that policy. $75,000, $100,000, $150,000. We're going to go with the buyer who obviously makes the highest bid on the policy. And once we arrive at the highest bid and the client says, yes, I want to sell the policy, we'll help to close that transaction, get all the paperwork together, prepare that paperwork for the client, and then ultimately see through to the end of the process, which is the change of ownership and beneficiary, and the client receives their money. Oftentimes, we're identifying life settlement opportunities through the process of a general insurance portfolio review. We're sitting down with a client once a year, or at least once every other year. We're looking at their permanent insurance policy. We're looking at the objectives for which they purchased that policy, its performance, the cash value. We're talking about overall their needs at the time. Oftentimes, there are changes in circumstances for a client. Their net worth is different than it was when they bought the policy. They may no longer need that policy. They may have issues where they need instant cash, and this is a source of liquidity, or other changes in business or personal circumstances. In general, the policies that qualify for life settlements are permanent policies, which include universal life, index universal life, variable universal life, first to die or second to die. But sometimes people think, well, I have term insurance, which isn't permanent coverage, so that's not going to be a life settlement candidate. The good news is, if that policy can still be converted to a permanent policy, a universal life or one of the other policies I mentioned, you can then transact a life settlement. In general, whole life insurance policies aren't a favored type of insurance in the life settlement market, unless the insured is very unhealthy. Some concerns in the settlement market that clients have expressed are, we have a stranger owning a policy on my life now. I don't have control of the policy anymore, and somebody I don't know owns the policy. The information I share with them is they're like a mortgage holder in a portfolio of mortgages. These buyers buy hundreds to thousands of life insurance policies. One of the other considerations in a life settlement are, what is the tax impact? So let's use the example again. A client has a $50,000 cash value and they've paid into the policy $100,000 over the life of the policy, and they sell that policy for $200,000 in the settlement market. So the taxes are long-term capital gains tax above the cost basis or the premiums paid into the policy. One of the other pieces of advice we give to every client is, this is a serious transaction. There's legal paperwork that's produced. We would like their attorney, their accountant to be involved in the process, if at all possible, to give advice, to ask questions, and we're happy to work with anybody's advisors to help them decide whether this is in their best interest.